Hello everyone, welcome to the Ichimoku daily analysis for the Euro US dollar FX for Wednesday, April the 4th, 2012. Well, a continuation of the trend to the downside today. The previous day's trading established the downside trend with the candle making a lower high and a lower low. Today another lower high and a lower low and a very large black bodied candle. The size of the body is relatively the same as the previous day's trading, so the sellers have maintained the downside momentum that they established on the previous day, and that could be significant for this market. The sellers have made very solid net bearish progress on the day between the open and the close, but they have lost commitment when they tested just below the 131.45 level, which is a previous area of resistance to this market and then previous support, and now it's an important level moving forward for tomorrow's trading. The market did just close down below there, but we see the large shadow on the bottom of this candle representing the sellers losing commitment, so that could be significant. The market is also trading within the cloud, so we'd expect to find potential support anywhere within the cloud, and the support from the cloud extends now all the way down to the 130.55 level roughly. In terms of our Ichimoku indicators, we have a market that's neutral in big picture terms. We were bullish. We had a bullish breakout. The market previous here testing to the cloud and then breaking out once again, and now trading within the cloud, so neutral. But the market is bearish in the medium term and fast term time frames by trading below the Kijun-sen and the Tenkan-sen. If this market is going to continue trending downwards, then obviously 131.45 is very important, and then down to the low of the current candle at 131.06, and then certainly down to the bottom of the cloud at 130.54. If we see a bearish breakout down below the cloud, then we could see the market trading significantly lower, but we do have some solid support below at 130.25 and 129.68. To the upside, if the market does rally, and at the moment the market is rallying through the 131.45 area, we have strong resistance at 132.11 and then extending up to the top of the cloud, coinciding with the Tenkan-sen at 132.45. So for tomorrow's trading, 131.45 is important. The low of the current candle is important at 131.06. Let's see whether we've seen too much bearishness in these extreme days and the market needs a rest. A test down to 131.05 and a breakout down below could be all the bears need for them to maintain control of this market and test down to the bottom of the cloud. Next, moving to the Aussie dollar US dollar, and here we have establishment of the trend to the downside. Previous day's trading, we had an outside bar in bar chart terms. The trend prior to that was up, so the previous candle that took out the high and the low didn't technically change the trend, and today we've had confirmation of that change of trend. The sellers took strong control of the market in yesterday's trading and showed very strong commitment, which led to this change of trend. They made very solid net bearish progress, as evidenced by the large candle body, and today also we have a fairly large body to this candle. They have lost some of the downside momentum that they built yesterday. The size of the body is slightly smaller, but not significantly so. The market today was bearish enough to close down below the important support level at 103, and we can see that that level was tested on a couple of occasions, and prior to that it was a significant level, and we've closed down below there in a bearish way. So quite a bearish move today in this market by trading down below there. The next level of support is 102.18, and that's a significant level for this market. An important test down to there will potentially, if we do see the market close down below there, we'll see us trading down to the 101.49 level. In terms of Ichimoku, the market is trading below the cloud and the Kijun-sen and the Tenkan-sen, so the market is bearish in all three time frames, and the Chikou span is below the corresponding price action, so confirming the bearishness that we're seeing in all three time frames. So quite a bearish market. We have a candle that's fairly bearish. The sellers did lose some commitment at the end of the trading day, but not significantly so. The market is attempting to rally. The 103 level will offer itself now as potential resistance to this market. It becomes an important level, and there is good potential for the market to test down to 102.18. Now, just moving on to something that's interesting that's happening in this market at the moment as well. The trend channels are working very well for the Aussie dollar at the moment, and here we can see the latest trend channel that's been drawn. We need a valid trend line that's been drawn here, and basically a trend line is between these two peaks and this trough here. And we have establishment of that trend in the second time frame downtrend, and we're able to draw this trend channel, this parallel line, that gives us a good target for the market if it does trade down to these lower levels, and the market will tend to bounce off these levels. And we've seen this trend channel tested on a couple of occasions, and the market trade up to the trend line, and then the sellers come back into the market. For tomorrow's trading, the target for this area is that the 101.73 level, which coincides roughly with the support offered down around this 101.40 level from a minor swing low. So we do have a target down around there, and if we see bullishness coming into this market, we could see the market bounce off and retrace back up towards the top of the trend channel, which is the trend line. But I've mentioned that these trend channels have been working quite well in the market, and we can see that we have 4 of them that have been established over the recent past, extending back to October, and here was the first one where the trend channel held as resistance to the upside, here where the trend channel held as support, and here as resistance. And when we get that break through the trend line, we do have strong warning of a possible change of trend in that second time frame, and then confirmation. So these have been working very well. It's something that we probably shouldn't ignore in this market, and they do give us significant levels. So there is a good possibility that this market could test down to this, roughly to this 101.75 level.